Your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports, we connect the dots so you know the actions you can take. How your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And to remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. I think we've got theme day today. So, you know, I look at the celebrations each day, and obviously Josh takes care of getting them ready for us. But today, you know, the theme here seems, so it's National Pumpkin Seed Day, and it's also National Pumpkin Spice Day. Now, do you put any seeds in the spice? I don't know. But, you know, it's now Josh has the spices there showing if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 FM 98.1 video feed. Now, thankfully, we don't have that, what is it, a pumpkin spice drink from, you know, Starbucks or something that seems to be the rage that comes out earlier and earlier. Soon, I think they're going to start coming out with that pumpkin spice drink right around July 4th. I mean, I think would they come out with it this time right after Labor Day or something like that? I mean, it's way too early. You know, we haven't even had Halloween yet. Although I did stop on my trip and got a pumpkin for the grandson. You know, that was it was actually, believe it or not, it was at a farm outside between San Luis Obispo and Pismo Beach. And the farm was actually run by, it was a sober living environment, which seems to me like that's a real challenge when you're up there in wine country. So that's, but going with our theme, it's also National Coffee with a Cop Day. So we always like coffee with a cop. But, you know, I have beaten anorexia, and I am not going to celebrate. We're not celebrating National Jiffy Mix Day. No, we're not going to do that one. We are going to go with, it's National Homemade Cookies Day. No Jiffy Mix there. So what is your question of the day? What's your favorite homemade cookie? And I'm going to tell you mine. I go pretty simple. Okay, Donna, are you listening? We're looking for that oatmeal raisin with chocolate chips. Oatmeal raisin with chocolate. That's just my favorite. Homemade, of course. And I don't even know if it has raisins in it. What's your favorite homemade cookie? Josh, you a cookie guy? Okay, put it in there, Josh. What's your favorite? If you're listening to us again, if you're listening to us while we record the program, it's a little after 9 in the morning. You know, just put it in the chat. Peanut butter cookie. I like peanut butter cookies. You know, how can you go wrong? I mean, I'm not sure. Peanut butter and chocolate, you know, goes with everything. And bacon goes with everything. Now, I don't know if you can put peanut butter cookies with bacon. I don't know. But I have had peanut butter. I have had maple donuts with bacon. And man, that's good stuff. Peanut butter cookie for Josh, oatmeal raisin chocolate chip for me. And if you're listening on the radio on ABC News and Talk, yell at the radio. We will hear you. Okay, let's move right along and see what's going on in the markets today. Is anything going on in the world? Oh yeah, we have had the government shutdown this morning. A little after midnight, the government shuts down. Essential workers are still working. Non-essential workers. Why do we have non-essential workers? I don't understand that part. But we have non-essential workers. They're not working, but they're on. So here's where the essential workers get gypped. So think about this. The essential workers go to work, they get paid. Non-essential workers, they do not go to work, and they're going to get back pay. So you get a little stress, and you still get paid. So it's like kind of like a vacation, isn't it? Well, other than the fact that you don't know whether you're going to be off for 1 day, 5 days, or as it was on the last time, 35 days. So we'll see what happens there. We are looking, the Dow Jones Industrial Average is now up 83 points. The NASDAQ is up 41. S&P 500 up 11. Oil down 52 cents a barrel. But the big news, obviously, in addition to the government shutdown, was how about that ADP jobs report? And there's a lot of our Fed speakers that have been coming out talking, and you wonder, obviously they're not watching the numbers, because you look at them and they say the jobs market is very, very strong. It's stable. And then today we get the ADP jobs report, and it says 3 out of the last 4 months, we've had negative jobs. That means not only were there no jobs created, we lost jobs. So this month it's 32,000 jobs lost. The revisions from the last month brought it down to negative 3,000 jobs. So not looking so good on the jobs front. And all those Fed speakers that have been out there yapping and telling us that we have to worry about inflation and the jobs are strong. Barkin, Musalem, Hammock, Bowman got it right. Waller got it right. The newest Moran got it right. Some of these others, you got to wonder. And now what's going to happen? Because we're not going to get the BS report from the Bureau of Labor Statistics will not be delivered on Friday because the government shut down. We're not going to get the first-time unemployment tomorrow because the government's not working. They'll come out. They just won't come out right away. But maybe they'll have more time to get maybe a little bit of accuracy in them. And who knows whether that'll be the case. But right now, what we do know for sure. Now, here's an interesting number. The mortgage bonds are up 16 basis points, which means rates are down just a little bit. The 10-year Treasury is down 3 basis points. That's the yield. But it has nothing to do with the jobs report. And how do we track that? So that's a good, people always say, well, how do you know, Ron, what's driving? Well, we look at the charts that show what so one of the charts I keep on my screen tells me what the bond market is doing every 15 minutes. So I look at it and I say, okay, what were the bonds at 5:15 when the ADP report came out? And then what did the 10-year Treasury look like 15 minutes later after that report? Well, at the time of the report, the 10-year Treasury was trading at 4.10. 15 minutes later, we're looking at it, and it was trading at 4.102. So that tells me there's no effect from the report. The absolutely nothing. Now we can look and see at what times the reports change, and that gives us a better indication of what's happening. But the ADP report really had no material effect on the bond market at all. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, smart ways to handle insurance deductibles, what buyers say they need most, and how the market's responding, and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564. Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less? All without having to spend more each month than you spend right now. Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app. rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. Calculated from actual lock rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to determine what your principal and interest payment will be. Rates locked yesterday. Conventional 30-year fixed, that was up 6.315. Jumbo 30-year fixed, that was down 6.465. FHA 30-year fixed, that was down 6.084. VA 30-year fixed, that was down 5.819. USDA 30-year fixed, 6.128, and that one was down as well. If you want our market thoughts, market commentary, we put that out each and every business day morning as early as the data allows. It's in our community, the Ron Siegel Radio community, and you can get in there for free. Just go to rsrlinks.com/HBOD, rsrlinks.com/HBOD. Go and join the community. It's there for you. And we put a lot of great information in there on a regular basis. Now, let's take a look and see what the markets are doing today. So I've already told you that we were looking at the S&P 500 is up 11 points right now. The 10-year Treasury is down almost 3 basis points. So it's at 4.12. And that's an important number because that is right around our Fibonacci level. I'll talk about that more in a minute. It's technical stuff. And we're looking at the mortgage bond. That bond is up 15 basis points, which means the yield on that one is down a little bit. We like it when those bonds are going down a bit. It's just good news for the markets. What's driving all of this? Well, ADP released their jobs report showing continued weakness in the labor market. 3 out of the last 4 months are now showing negative jobs, all while Federal Reserve Fed members have been saying that the labor market is solid. I wonder if they're getting their cue from Jerome Powell.
Idiot.
Well, this rock solid, maybe. The Fed members that have been saying the Fed needs to get ahead of a labor market weakness are looking very smart. The ADP employment report showed that in September, 32,000 jobs were lost, which was much weaker than estimates, looking for a gain of 50,000. Additionally, August was revised lower by 57,000 to a negative 3,000. Job growth has been negative 3 out of the last 4 months, and the weakening of the labor market is clear. Small and medium-sized businesses shed jobs, while large businesses added 33,000. Both service providing a goods-producing job showed losses, with services leading the way with negative 28,000. Looking at the sectors, 7 of the 10 showed losses. The only one showing strength was education and health services, which is not market sensitive, and where most of the job gains have been coming from over the last year. Wages for job stayers, or those staying in their current job, rose 4.5% year over year, which is a slight increase from 4.4% in the previous report, but they have been on a downward trajectory. Job switchers, or those changing jobs, saw a big deceleration in wage gains, dropping from 7.1% in August to 6.6% in September. This also shows a lot of weakness as there is less poaching from other companies with higher pay. The trend of job growth is clearly lower. 3-month average, $23,000 per month, including 2 months of negative job growth. 6-month average, $23,000 a month. 12-month average, $96,000 a month. After the release, odds of a 25 basis point cut in October rose to 100%. And we kind of like that idea getting priced into the market right now. So we appreciate that part of it. While the odds of a December 25 basis point cut rose to 92%. After President Trump removed Erica McIntyre from her job as the head of BLS, he had nominated E.J. Antony as her replacement. Now it appears that this nomination has been revoked, and they plan on announcing someone else in the near future. This is something to keep an eye on, as it will have an impact on some of the most important economic reports we receive, and the public's perception of data credibility. So very early this morning, we already talked about it, the U.S. government shutdown. The length of the shutdown will determine the impact that this is a full shutdown, similar to 2013, unlike the shutdown in Trump's first term, which was partial. The CBO estimates that there could be as much as 750,000 furloughed employees, and private government contracts may not get paid. The shutdown has a big impact on data. The BLS initial jobless claims, that BS report, tomorrow, and the jobs report on Friday will be delayed. So today's ADP report has even more significance, and for now is the de facto jobs report. Other reports from the BLS, like a consumer price index and the producer price index, would also be affected depending on the length of the shutdown. Additionally, reports from the BEA, like personal consumption expenditures and the Census Bureau, could also be delayed. Last time there was a full shutdown was 2013. It lasted 16 days. While that doesn't sound long, the CBO estimates that it caused GDP to be lower by 0.6% on an annualized basis. The CEA estimated that it cost the U.S. 120,000 private sector jobs. While these are not great things, the silver lining is that slower growth and weaker jobs do help mortgage rates. The shutdown could also impact the mortgage industry. VA, FHA, and USDA loans could be delayed, and any mortgages that require FEMA flood insurance could be impacted as well. That is the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. So you look at some of the numbers in that data, and you just have to be a little bit cautious because you don't know how long some of it's going to take. And like the VA, they're still working. The regional lending centers are open and operational. But if we had our active military members who are not getting paid right now, they're basically their payroll is deferred. And yes, I know that the Navy Federal has like a 92% market share of people in the military are members of Navy Federal. There are some options there. So if you're a veteran, make sure that you're reaching out to the credit unions. USAA probably has some programs as well. So make sure you're checking there so you don't have that major hardship on your family. I would just recommend that for you. Don't have any affiliation with those guys. Just love our veterans. So make sure you're taking a look at that. And we will keep you posted on all of our social channels as to what's going on with all of these things. USDA loans, that's a biggie. So those are going to be delayed right now. So you have to watch out for that one. And, a lot of these reports, we're not really worried about too many of them because the sooner you get them, the less accurate they are. That's really what happens on those. And one of the things that's really troublesome when you look at the jobs reports is what's happening with small business. And as many people know, I am a proponent of a lot of the president's policies. I don't like the way he talks all the time, but the policies, I like them. But what are they doing to small business? You see, Apple can go in and commit to $100 million or $100 billion to move a factory. And Eli Lilly can commit to doing what or Pfizer can make the commitments that they made yesterday. And NVIDIA can make their commitments. But the small business person doesn't have that opportunity. We don't have that kind of money. So all these things that are good for these big business companies, not really great for the small business owners. And that's who we're looking out for because that's you and me. Just throw that out there for you. Let's see what we've got going here. This one might fit in here. Borrow Smart, brought to you by GetHomeSelect.com, GetHomeSelect.com. Here's a question for you. When's the best time to buy a winning lottery ticket? Before someone else does, right? Same goes for positioning yourself in a rising housing market. I am Ron Siegel, certified liability advisor, helping people build wealth through strategic debt management. According to recent forecasts from Fannie Mae, the Mortgage Bankers Association, and the National Association of Realtors, home sales are expected to climb from about 4.75 million in 2024 to over 5.25 million by 2026. That's roughly a 10% jump in just 2 years. So what does this mean for you when sales volume increases like that? Competition heats up, more buyers enter the market, properties move faster, and here's what most people miss. The folks who position themselves now before the rush, they're the ones who win. Let me share a story. I worked with a family last year who were watching the market, waiting for the perfect time to buy. Meanwhile, their household was carrying about $42,000 in various debts, credit cards at 22%, a car loan at 8%, and they were sitting on equity in their current home. They kept saying, well, wait until rates drop more. But here's what they weren't considering, their household blended interest rate. When we added up all their debt and weighted them by balance, they were paying an effective 14.8% across their entire debt portfolio. We repositioned their equity, consolidated those high interest debts, and yes, their mortgage rate went up slightly. But their household blended interest rate dropped to 6.2%. That freed up $1,847 per month in their budget. Now, could they have waited? Sure. But while they were waiting, they were hemorrhaging money every single month to credit card companies. Strategy beats rate always. Here's the thing about these forecasts showing rising sales. They tell us the market is shifting. More activity means more options, but it also means more competition. The families who get their financial house in order now, who understand their true debt picture and create a strategy around it, they're not scrambling when they find the right property. Think about it this way. Your mortgage rate is only one part of the conversation. What really matters is how much money is actually coming out of your household budget each month across all your obligations. When you look at it through that lens, waiting rarely makes sense. I've been doing this since 1983, and I can tell you, the people who plan ahead, who look at their complete financial picture through the framework of safety, liquidity, and return, they consistently come out ahead. If you're thinking about making a move in the next year or two, don't wait until you're competing with everyone else. Find out if you're financially ready right now. Visit rsrlinks.com/keysteps, rsrlinks.com/keysteps for our financial readiness tool. It takes just a few minutes and shows you exactly where you stand. That's rsrlinks.com/keysteps. I'm Ron Siegel. Remember, strategy beats rate always. We'll talk to you again next time. Let's see. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, what buyers say they need most and how the market's responding. And let's see, we've also got the smart way to handle insurance debt deductibles. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564. Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the first Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ. and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. Do you believe Southern California real estate is a great investment? Are you a little short to be a cash investor? Are you missing the Social Security card or tax returns? The Siegel Lending Team has the loans for you. Common Sense Lending is back. Yes, there's a cost to higher risk, but the reward can be great. Call today for details. 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 217037, and DRE number 1869452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. What buyers say they need most and how the market's responding. A recent survey from Bank of America asked would-be home buyers what would help them feel better about making a move, and it's no surprise the answers have a clear theme. They want, let me get this over here. They want affordability to improve, specifically prices and rates.
Surprise, surprise.
If you're watching us on RonSiegelRadio.tv, any of our socials with ABC News and Talk, AM 1490 and FM 98.1 video feed, you are seeing a chart. We like charts. And it shows the top two things home buyers say they're looking for. 63% lower home prices, 50% lower mortgage rates.
Surprise, surprise, surprise.
Here's the good news. While the broader economy may still feel uncertain, there are signs. The housing market is showing some signs in both of those areas. Let's break it down so you know what you're working with. Prices are moderating over the past few years. Home prices climbed fast, sometimes so fast it left many buyers feeling shut out. But today, that pace has already slowed. For comparison, from 2020 to 2021, prices rose by 20% in a 12-month period. Now, nationally, experts are projecting single-digit increases this year, a much more normal pace. That's a sharp contrast to the rapid growth we saw just a few short years ago. Just remember, price trends are going to vary by area. In some markets, prices will continue to rise, while other areas will experience slight declines. Prices are not crashing, but they are moderating. For buyers, the slowdown makes buying a home a bit less intimidating. It's easier to plan your budget when home values are moving at a much slower pace. Mortgage rates, same time, rates have come down from their recent highs, and that's taken some pressure off would-be home buyers. As Lisa Sturdivant, chief economist at Bright MLS, says, quote, slower price growth coupled with slight drop in mortgage rates will improve affordability and create a window for some buyers to get into the market, unquote. Even a small drop in mortgage rates can mean a big difference in what you can pay each month in your future mortgage payment. Just remember, while rates have come down a bit lately, they're going to experience some volatility. So don't get too caught up in the ups and downs. The overall trend in the year ahead is that rates are expected to stay in the low to mid sixes, which is a lot better than they were just a few short months ago. They may even drop further depending on where the economy goes from here. Why this matters? Confidence in the economy may be low, but the housing market is showing signs of adjustment. Prices are moderating and rates have come down from their highs. For you, that may not solve affordability challenges altogether, but it does mean conditions look a little different than they did earlier this year, and those shifts could help you re-engage as we move into the new year. Bottom line, both the top concerns for buyers are seeing some movement. Prices are moderating, rates are easing, and both trends could stick around until 2026. If you're considering a move, you got to get ready. rsrlinks.com/keysteps. rsrlinks.com/keysteps. See how ready you are right now to make that move. Let's connect and walk you through what's happening in our area and what it means for your plans. That is the Real-Time Real Estate segment brought to you by rsrmoney.com. rsrmoney.com. Your Credit Matters today being brought to you by rsrlinks.com/debt-free. rsrlinks.com/debt-free. Are you throwing away money on insurance premiums because you set your deductibles once and never looked at them again? Most people pick a deductible when they buy a policy and they never think about it. Meanwhile, their life has changed, their savings have grown, but they're still paying premiums like it's 10 years ago. Today, we're talking about insurance deductibles and a strategy to make them work for you instead of against you. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Let me tell you about a conversation I had last week. A couple in their early 60s had been with the same insurance company for 20 years. Good people, responsible always, paid their bills on time. When I asked about their auto insurance deductible, they said $250. Homeowners, also $250. So I asked them why they set those deductibles. When we first bought our house, they said that was 1985. Their financial situation today, completely different. Retirement accounts, substantial savings, home paid off. But they were still paying premiums based on decisions they made when they were 28 years old with 2 kids and no emergency fund. Here's what most people don't understand about insurance deductibles. The relationship is simple. High deductible, lower premium. Lower deductible, higher premium. Everyone knows this in theory, but knowing it and actually reviewing it, two different things. The real question isn't what deductible you have, it's whether that deductible still makes sense for your current situation. When you're young, maybe you've got limited savings, kids at home, tight budget. A low deductible makes sense. You're trading higher monthly premiums for the security of knowing you won't face a big out-of-pocket expense if something happens. But what about 20 years later? You've built up savings, your kids are grown, you've got an emergency fund. Now that low deductible is just costing you money every single month. That couple I mentioned, we ran the numbers. By increasing their deductibles to $1,000 on both policies, they'd save about $425 a year every year. Now, here's where it gets interesting. I told them to shop their insurance, get quotes from 3 or 4 companies, see what's out there. When's the last time you actually shopped your insurance? Most people stay with the same company for decades because it's easy. But easy isn't always smart. They shopped around, found another carrier with better rates and a higher deductible. Now they're saving even more, close to $600 a year total. But here's what I really want you to hear. What if you're not comfortable with a higher deductible? What if you don't have that emergency fund built up yet? There's a strategy for that. Take the difference between what you're paying now with the low deductible and what you pay with a higher deductible. Let's say it's $50 a month. Instead of sending that $50 to the insurance company every month, put it in a Roth IRA. Now, you got to talk to your financial advisor and CPA. I'm not giving tax advice or financial advice, but think about what this does. You're building your own safety net. That $50 a month grows tax-free. After a year, you've got $600 plus whatever it earned. After 2 years, you've got enough to cover even a high deductible if you need it. And if you don't need it, that money keeps growing tax-free for your retirement. And then consider increasing the deductible again. Compare that to paying the insurance company extra premiums every month. That money's gone. You never see it again. You're renting protection you're statistically unlikely to use. With the Roth IRA approach, you're building an asset, safety, liquidity, and return. You've got the safety because the money's there if you need it. You've got the liquidity because you can access your contributions anytime. And you've got return because it's growing tax-free. I had a listener implement this strategy about 5 years ago. She was nervous about raising her deductible from $500 to $2,500, a big jump. But she started putting $75 a month into a Roth IRA. That's what she was saving on premiums. Guess what? In 5 years, she's never filed a claim. That $75 a month has turned into about $5,000 in a Roth IRA. If she kept that low deductible, she would have sent that money to the insurance company and had nothing to show for it. Now, some of you are thinking, Ron, what if I have a claim in year 1 before I've built up that fund? Fair question. You need to come up with the higher deductible amount. But here's the thing. Most people don't file claims every year. If you're filing claims that often, you've got a bigger problems and your rates are going up anyway. The math works in your favor. You're far more likely to save money over time with a higher deductible than to come out ahead with a low one. And remember, the relationship between deductibles and premiums isn't the same across all types of insurance. You might save a lot by raising your auto insurance deductible, but less on your homeowner's policy. It depends on your specific situation, your insurance company, your age, and where you live. This is why you need to shop. Call 3 or 4 companies. Get actual quotes with different deductibles. Look at the real numbers. Don't just assume your current company is giving you the best deal. Now, if you don't want to spend your time calling around to different insurance companies, I work with some great insurance agents who can do this for you. They'll shop multiple carriers, compare coverage and deductibles, and give you a second opinion on what you're currently paying. Sometimes having a professional look at your policies reveals gaps in coverage you didn't even know you had, or coverage you're paying for that you don't actually need. I worked with a business owner who had 6 different insurance policies: auto, home, umbrella, business liability, the works. He couldn't remember the last time he reviewed any of them. We connected him with an insurance agent who shopped the whole package. He ended up switching companies and adjusting deductibles. Saved almost $2,000 a year. $2,000. We set up a strategy where half went to paying down debt and half went into a Roth IRA as his insurance reserve. After 2 years, he had $2,000 built up, way more than enough to cover any deductible, and it kept growing. That's $2,000 a year that was going to insurance companies, now working for him instead. Strategy beats rate always. Now, I'm not saying everyone should run out and get the highest deductible possible. Some people should keep low deductibles. If you absolutely cannot handle a higher out-of-pocket cost, then the peace of mind is worth that extra premium. That's a valid choice, but make it an intentional choice based on your current situation, not a decision you made years ago and never revisited. Here's what you should do. First shop your insurance, all of it, auto, home, umbrella, if you have it. Get quotes from at least 3 companies. Look at different deductible levels. See what the actual savings are. And if you want help with that, reach out. We can connect you with an insurance agent who will give you a thorough second opinion at no cost to you. Second, if you decide to raise your deductibles, set up that Roth IRA. Take the premium savings and redirect it. Build your own reserve fund, one that grows tax-free and actually belongs to you. Remember, check with your tax professionals and financial advisors. Third, make this an annual review, not every 20 years. Every year during open enrollment or when your companies renew, your policies renew, your situation changes. Rates change, companies change. Stay on top of it. Your insurance deductibles are part of your overall household budget. They affect your cash flow every month. Get them right, and you free up money for things that actually build wealth. Get them wrong, and you're sending unnecessary money out the door year after year. Look, your insurance deductibles are just one piece of getting your financial house in order, but that's an important piece that most people completely ignore. I've put together a free tool that walks you through organizing all of this: your insurance, your debt, your monthly cash flow, everything. Because you can't make good decisions about one piece without understanding how it fits with everything else. Get the tool, rsrlinks.com/keysteps. rsrlinks.com/keysteps. It'll help you look at your complete financial situation, including those insurance deductibles you probably haven't thought about in years. And if you want an introduction to a great insurance agent who can give you a second opinion on your coverage, just let us know when you reach out. Shop your insurance, consider that higher deductible, use a Roth IRA to hold the savings, build wealth instead of just paying premiums. rsrlinks.com/keysteps. Get your financial house in order. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. I'll speak to you next time. That is the Your Credit Matters segment, brought to you by rsrlinks.com/debt-free. rsrlinks.com/debt-free. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, choosing your business structure. We'll talk about that one. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564. Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the first Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by GetHomeSelect.com, GetHomeSelect.com. Starting a business, here's a mistake that could cost you thousands. Picking the wrong business structure. Most entrepreneurs focus on their product or service, but the structure you choose today could make or break your financial future. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. You know what's interesting? Over 5 million people filed new business applications last year. 5 million. And most of them face the same question. Should I be a sole proprietor, an LLC, or a corporation? Here's the thing. This isn't just about paperwork and filing fees. The structure you choose affects your taxes, your personal liability, and how much of your hard-earned money stays in your pocket versus going to Uncle Sam. Story time. I worked with a business owner a few years back. He'd been running as a sole proprietor for 7 years. Simple, easy, no complicated filings. Then his business got sued. Suddenly his house, his savings, his kids' college fund, everything was on the line. Why? Because as a sole proprietor, there's no separation between you and your business. So what are your options? Sole proprietorship. It's the simplest route. You file your business income on your personal tax return. Easy to set up, easy to maintain, but here's the catch. If your business owes money or gets sued, they can come after everything you own personally, your car, your home, your retirement accounts, everything. Now, corporations are different. A C corporation is a separate legal entity. That means liability protection. But you might pay taxes twice, once at the corporate level and again when you take money out as dividends. An S corporation lets you skip that double taxation. The income passes through to your personal return, kind of like a sole proprietorship, but you still get that liability shield. The downside, there are restrictions. You can't have more than 100 shareholders, and they all need to be U.S. citizens. Then there's the LLC, that limited liability company. Think of it as the best of both worlds. You get the liability protection of a corporation, but the tax simplicity of a sole proprietorship. For most small business owners, this is the sweet spot. But what does this mean for you? Strategy beats rate always. The same principle applies here. The cheapest, easiest option isn't always the best option. You need to think strategically about your business structure the same way you should think strategically about your debt. Consider these three factors: safety, liquidity, and return. Is your personal wealth safe from business liabilities? Can you easily access your money, the money you earn? Are you maximizing your after-tax return? Here's another important point. This isn't a permanent decision. As your business grows and changes, you can adjust your structure. Maybe you start as a sole proprietor to keep things simple, then move to an LLC when you have more assets to protect. But here's my advice. Don't make this decision alone. Talk to a tax professional or an attorney or both who can look at your specific situation, because what works for your neighbor's consulting business might not work for your construction company. The key is understanding that your business structure is part of your overall wealth building strategy. It's not just about today. It's about protecting what you're building for tomorrow. And remember, I give you information on Ron Siegel Radio. I am not an attorney. I am not a CPA. I am not an enrolled agent, but I talk to lots of them. And generally, your CPA and your enrolled agent are not tax strategists. They report taxes. They report the proper way of what you have already set up with a tax strategist. If you need a tax strategist, let me know. I know them. Remember, whether you're managing business debt or personal debt, strategy matters. If you want to learn more about how to think strategically about all your aspects of your financial life, get your personal financial life in order at rsrlinks.com/keysteps. rsrlinks.com/keysteps for our financial house in order tool. This is Ron Siegel reminding you, strategy beats rate always. Until next time, we'll chat with you again. That's the Borrow Smart segment brought to you by gethomeselect.com, gethomeselect.com. And quite simply, the home that loan, the all-in-one loan that we talk about in the Get Home Select series, is the best loan on the market. No, it's not the lowest interest rate. It's the lowest interest expense if you qualify. You'll pay off your house faster if you qualify. It's completely different than anything you've ever heard or thought of in the past. Go visit the site, gethomeselect.com, gethomeselect.com. You know, and there we've talked about several strategies today, and there are tools that we have available for you for all of them. So we talked about getting out of debt. We have that two-step solution, rsrlinks.com/two-step. Restructure all your debt right now, and then plan to redo it again in 6 months. Rates will probably be cheaper, no promises. Your FICO score, if you follow our guidance, should be higher, and it won't be a cash out refinance because you're taking care of that right now. So rsrlinks.com/two-step. That's the tool for you. We talked about lower mortgage rates. Well, go and buy, making sure you understand the buy down program, rsrlinks.com/buy down. rsrlinks.com/buy down. We explain in there how you can get permanent financing with interest rates well below the market average, rsrlinks.com/buy down. Buying that house, we've got the buyer's guide, rsrlinks.com/HBG, rsrlinks.com/HBG, and the home seller's guide at rsrlinks.com/HSG. And of course, Key Steps. Everybody should have it because everybody's got a credit report. Are you watching it? Maybe somebody else is, and you need to know if they're monitoring, if they're taking advantage of your credit. Well, the credit monitoring part of that will help. Check your market, the value of your real estate right there in Key Steps. You can also monitor your assets in Key Steps, your budget in Key Steps. It's all right there for you. So why aren't you taking advantage of it? It's a free tool that we put out for you, and I just highly recommend it for everybody. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.